Hello traders, welcome to another crypto market and global macro update. We're going to be mainly talking about gold, silver, and the gold and silver ratio today, but we will touch on BTC as well, looking at the price action of Bitcoin on a large time frame. But first things first, we do want to look at these two metals, particularly gold and silver here. Let's start off with gold. We're going to be opening up this on a large time frame. There we go. And what we're looking for is a potential level of support. So we did have a nice ascending zone that initiated the potential symmetrical triangle that was playing out right here. We had a series of higher lows and lower highs, squeezing the price, contracting the volatility, and then what we did see is we had a pretty big sell-off here on around early this week. I think it was Monday that we had a big sharp drop off in Bitcoin, Ethereum, the SPX, which is the S&P 500, gold, silver, basically almost everything went down except for things like US dollar, Japanese yen, and safe haven currencies. And that's basically been the two kind of assets on the levers, risk on and risk off. That's what we're going to be looking at a more kind of larger perspective when you're looking at multi-asset analysis. So first looking at gold, let's go back to the weekly chart and understand why this is such a major zone within the around $1,800, $1,900 level. Firstly, it's because that was the previous high that we saw back in 2011, and then we saw another around all the way from 2011 to 2012. Around $1,800 be the level of support. So we do see a massive impulsive push break this previous key level of resistance, and I still expect the potential level to hold, and we're going to get another impulsive push to continue the overall momentum. That's going to be my bias, and in my personal opinion, I don't really see anything that could really not see that hold. Obviously, we're going to be looking for confirmations, but in terms of the fundamentals, we do see interest rates basically at an all-time low. Countries across the globe, first world mainly, that aren't suffering from major inflation are seeing interest rates low and stay low and actually go lower. So then basically, in terms of the monetary uncertainty, there's eventually going to be a lack of confidence in fiat currencies. So safe havens in terms of the sound money would be gold and silver, and that's exactly what we're going to be seeing right here in terms of the potential next leg up and the continuation of the overall trend for gold, silver, as well as cryptocurrencies. So that's the weekly chart. We're now going to go on to the daily. We do see this kind of two sections here. First level is around 1860. Next level is around 1800. We see that was the previous resistance as well as the previous support right here, which initially bounced off pretty aggressively. We got a pretty strong impulsive push or a hold where we got injections of buy pressure around this 1860 zone, and then we are getting some consolidation. But what we're going to be looking for is a squeeze within the structure where, let's get our brush, we're going to see sell pressure push the price lower, making lower highs, but there's going to be, in our opinions, a potential level of support. So there's going to be a squeeze. This was an impulsive push that broke the price above our major level of resistance right around here, 1830, 1840. So this is our impulsive push right here. We're getting our corrective move right now, which is contracting the volatility in the price action because we are getting a level of support right here. Might be a slight descending zone. Might be just a horizontal level of support, but in terms of what we're looking for a contraction where we're going to see a bottom hold, a slight contraction where we're going to see decreased amount of movement within the price, and then once you see those injections of buy pressure push the price above major levels of resistance, you're looking for pullbacks to validate the previous resistance as new levels of support. So that overall is what we're going to be looking for in terms of the gold price action on the daily chart on the larger time frames. Is we don't really see it right now be as a potential level of an entry, but we're going to be looking for that validation for a break in that first impulsive push to continue the overall trend. So that's going to be gold. Let's now go on to silver. Very similar story with silver, and then we're gonna go on to the gold and silver chart here. So let's go to the weekly to first understand where we currently have been and where we are right now. So if we look on the weekly chart on a large time frame, we can see that we were in this consolidation for quite a long time, where we were making a lower high and then a lower high and then a lower high. So this was the entire bear market consolidation for silver. We do see that this previous high right here was a major level that we needed to break. Once we were able to break above that zone, we've broken this major squeeze that was occurring right here. We see a series of low and then a hold. If we are looking at a monthly chart, this is a wick where the price was pushed down, but then the buyers were able to push it back up above our major level of support here. So there was a strong level of demand around the $14, $13 range, and we made a strong impulsive push to break above this major level of significance, which is right around here. If we're looking at a larger time frame, we may be able to see a level where this is a support, this is a resistance, and this is a resistance around $20. It's not going to be perfect, but it's going to be right around there. So I wouldn't be surprised if we get a deeper contraction for silver, but at the end of the day, we're looking for that next impulsive push, because this is completely normal, and look how deep this pulled back and how long. Remember, this is the weekly chart after this massive bullish push. They need to occur, and it's completely normal to see pullbacks within bullish trends. So we're going to be looking for continuation patterns to the upside. And then on the daily chart, we do see, let's just bring that back, a series of lower highs that we can connect a trend line to. This guy right here, and then this is the potential level of support that we're seeing right now at around $22. We see that was the previous resistance turned into new level of support back in late July, and then now we're coming up to that area again. So we saw that series of higher lows, lower highs, squeeze the price. This is a pretty aggressive push to the downside, a little bit of confidence loss for the buyers, but overall we do see, although this support broke, we're looking at this zone of sensitivity right here, and we can see that there is some level of reaction from the price around this zone. So it'd be nice to see a little impulsive push to the upside, validate this descending zone yet again, and then a small impulse push, slight consolidation, and then we're looking for that previous high to break. It could go like this for a little bit. We don't exactly know. It could come back down, but we're looking for that impulsive push to break that key previous high. And then once you see that pullback and that injection of buy pressure to push the price higher up, we're looking to maybe use a stop entry or entries, continuing that overall momentum to the upside after our long drawn out consolidation phase, because we look at this as a strong impulsive phase. We need to have some level of pullback. So let's take that all out. So this is a strong impulsive push. We could get a deep corrective move. Maybe it's going to be a descending support zone. That's going to be a descending wedge, and then that's going to be your previous high. You're looking to see that break and then that strong impulsive push, and then you're looking for entries above that previous high right around here. And that's going to be what we're going to be looking for silver. And if something else happens, if it goes deeper down, we'll obviously have to kind of reconsider. But the weekly chart previous high, you can see right here, is going to be around $20, and it's at 22 right now, so we do have a little bit of wiggle room for the price to get further down. I totally don't mind staying patient, because let's just quickly go to the monthly chart. Not perfectly ideal, but we can see, oops, so let's just go like here. This previous, let's say $20 zone was a key level of resistance back in 2007 all the way to 2010, was a strong level of support. and then turned into a new level of resistance. So it wouldn't be too hard to believe that we could get some level of a retest all the way to $20. We did reach almost $30 or around $29.8. So that's a pretty big drop, but we can fully be aware that silver is going to be more volatile than gold. Yes, it can appreciate at a greater rate than gold to the upside, but that means when you are going to the downside, we could see, or we usually do see, silver fall at a greater rate. So just something to keep in mind. I wouldn't be too surprised if we do come back to that maybe $21, $20 where we retest it. And then once we get that validation for that $21, $20 support for silver, I think that could be a really good opportunity for longs, as long as we're getting that validation from the buyers. So now we're going to look at the gold and silver ratio, because this is quite important. We do see that there was a massive, not really sell-off, but a massive shift in the ratio between gold and silver, where we had a massive spike. This is when we had that liquidation event. Basically every single asset that is not a safe haven fell during that time. Basically the only thing that went up was safe haven currencies, including US dollars and Japanese yen. Even things like gold and silver went down, and we can see that right here where the value of gold in relation to silver skyrocketed. We can see that right here. That just means that silver depreciated at a greater rate compared to gold, and then we see the polar opposite thing happen, where after we see that consolidation and then a recovery from the metals, we start to see silver outperform gold, and that's what we see right here, is silver appreciating at a greater rate compared to gold. And what we're going to be looking for is a potential continuation of this overall trend, because we do expect the overall metals market to continue on its bullish trend. So we see this major level at around 82 in terms of how many ounces of gold you can get, or how many ounces of silver you can get for 1 ounce of gold, and that's currently around 81.34 ounces of silver for 1 ounce of gold. And this is a major level that we're now retesting. We see that that was a strong level of support, 1, 2, 3, 4, and then we saw that massive spike to the upside. We didn't get really any level of validation on the downside, only that we're getting a weekly chart close really perfectly on that zone. So in my opinion, that could be a nice potential level where the value of silver is going to appreciate at a greater rate than gold, which in other terms we expect it to move to the downside. So you could be looking for a confluence where we're getting a retest of this previous support as a new level of resistance before the next impulsive push for silver. So then we could be looking for a confluence of the gold and silver chart looking bearish with a great looking long opportunity for silver. That would be the ideal situation for us to find ourselves in. But overall, we still expect the gold and silver ratio to fall unless we start to break above the 82 range and hold on the weekly chart. We only really like to look at this tool on large time frames, daily, weekly, 6 hour, kind of maybe 4 hour, but obviously we're not really going to be looking at anything smaller than that. So that's going to be my view of the gold and silver ratio. And then we're going to quickly look at quick discussion on the US dollar. It's been in a bearish trend overall. We do see that it did break a key level of resistance at around 94 with a series of lower lows and then higher lows, breaking this potential bottom. There's a major level of resistance at around 94. You can see that was a previous low right there, which is going to potentially be a new resistance. So we're going to be looking out for that. It'd be great to see the US dollar start to weaken and then fall to the downside. And I think if that does occur, BTC is going to be looking pretty phenomenal, because we can see already it is holding that 10K zone, that previous resistance that we've been failing to break above for basically all of 2020 and even a part of 2019. You can see that right here, 2019. We did break slightly above it, but we fell quickly after below this zone. We haven't really broken above it since we had that strong impulsive push that we had back in the summer of 2020. So it makes sense that we're going to be pulling back and validating this zone to some degree, but I do expect a potential descending wedge right here. So let's get the highlighter. So we see a high, a lower high, and a lower high. So we're going to be looking for a potential break in the market structure where this previous lower high is going to be that key zone of resistance that we're looking to see the price break, as well as this descending zone, which is going to be adding additional confluence to our trade opportunity. And then we see a low and a lower low, so we're expecting to see this as a potential bottom where that 10K zone, which is a previous resistance, basically for all of 2020, is going to be a strong level of support. And then we're going to be looking for that first strong impulsive push to break that market structure. We're looking for that nice pullback to validate that previous resistance as a new level of support. You could be looking for candle closures, wick closures on that zone, and then once you see that confirmation, you're looking for that next impulsive push to start making you money. So that is the overall goal for BTC in this current market. If I see something else happen, obviously I'll definitely make a video, but things are still, in my opinion, bullish, and I think risk on assets. I think assets that have a fixed supply, like, well, maybe not gold, because people talk about like interplanetary exploration and mineral exploration in space, so you can't really say that is a limited fixed amount of I guess physical ounces and representation, but BTC is not that. So overall, we can see this larger triangle has still broken out, and we're now getting that validation on a major structural zone. So I still look at this as a potential really good opportunity for investments, dollar cost averaging, looking for long opportunities in speculative assets once we start to see BTC start to move to the upside. So that's going to be the video for today. Thank you very much for watching. If you found this useful, informative, educational, entertaining, and it'd be great if you would give it a thumbs up and subscribe. It definitely does help us out, and it lets us know that we should continue making videos like this. So thank you very much for your time, and hopefully you have a good weekend, and until next time, have a good one.